I think that to explain that, I need to give you a little bit of context on the history of PicPay, right? So PicPay was founded in 2012 with a basic value proposition, which was P2P payments and P2 merchant payments using a QR code. So today, this is called real-time payments, right? But at that time, it was just a broken journey that basically thought, well, let's try to fix this.
You bridged that.
Yeah. So that was the beginning of the company. So in the end, as you know, Pix, which is the real-time payments infrastructure here in Brazil, we basically were Pix before Pix existed. And then that was true for the first 8 years of the company. And so you could say that it's a monoliner with several different use cases, but still a monoliner, right? So end of 2020, central bank launches Pix. Was kind of a lot of people said, well, PicPay is going to die. But quite the opposite. We actually looked at Pix as just a new rail for the same product that we had, and we embraced Pix. And as Pix took off and became the number one payment method in Brazil in number of transactions, and we knew how to do that because we've done it for 8 years, it actually got us a disproportional large participation on Pix. If we look at Pix transactions in Brazil, 11% of all Pix transactions either begin or end at a PicPay account. So Pix actually boosted growth. And in parallel, we actually started to expand the product portfolio. And so we started first through a financial services marketplace. Then we started to offer cards, also loans from 6 different banks, but still on a asset-light, fee-based model. So we basically distributed products from different partners. And that was true till the end of 22, when we've decided to actually, for the core products, to put them on our own balance sheet. It was twofold decision. First, for most of those very relevant products, and especially cards, which is a very relational product. If you don't have the full experience with you, it's just a nightmare, right? Because in the end of the day, it's my client, but I'm using somebody else's products. He's not as worried about what happens as I need to be. So in terms of user experience, we thought that it's vital for us to actually dominate that. And also, you actually tap into a much larger TAM. It's funny that lots of investors, when we made that decision, they would tell us, why are you moving from a asset-light business to a business which is still quite a relevant part of it is asset-light, but into a, let's say, asset-heavy business? And it's basically because if we were thinking about multiples, we probably wouldn't do that. But we're thinking about the future of the company, right? And if we kept the same old business model, I'm pretty sure that we wouldn't be what we are today. And our future would be a much smaller one. And that was not what we wanted.